Hello traders and welcome back to Explain the Charts, your go-to channel for no-nonsense technical analysis. Today is October 4th, 2025, and we are diving deep into Bitcoin, which has just had an absolutely explosive week, smashing new all-time highs. First, let's cover the news driving this incredible momentum before we get into the charts. The headlines are overwhelmingly bullish, with Bitcoin recently rallying to nearly $124,000, and some analysts are already calling for a quick breakout towards the $150,000 mark. This sentiment is bolstered by massive inflows into Bitcoin ETFs and a very strong start to what the community has dubbed October. Adding to this is the recent U.S. government shutdown, which began on October 1st. Historically, investors flock to safe haven assets during times of political and economic uncertainty, and cryptocurrencies are increasingly being viewed as a digital gold in these scenarios. However, it's worth noting that during the last major shutdown in 2018, Bitcoin saw an initial pump followed by a steady decline, so caution is warranted. On the adoption front, the news couldn't be better. We're seeing continued institutional adoption with major players like BlackRock recommending portfolio allocations to BTC. MicroStrategy's Bitcoin treasury has reportedly swelled to an astonishing $77.4 billion, showcasing immense corporate conviction. Furthermore, news that the Walmart-backed banking app OnePay plans to integrate Bitcoin trading adds another layer of potential mainstream demand. Now, let's see how this intense news cycle is reflected in the price action on our daily chart for BTCUSD. Looking at the broad daily chart, the long-term trend is undeniably bullish. After a significant market correction that found its bottom in early August and retested in early September around the $50,000 to $55,000 range, we have seen a powerful and sustained recovery. That price zone has now established itself as a massive long-term support floor. From there, the price began a steady climb, decisively breaking through previous resistance levels at $70,000, then $80,000, and showing incredible strength as it smashed the psychological $100,000 barrier in December 2024. The price then entered a period of consolidation before beginning its most recent leg up in late September. The rally at the start of October has been nothing short of spectacular, pushing Bitcoin into new price discovery territory. Yesterday, on October 3rd, we saw price hit a new all-time high of nearly $124,000. However, look closely at that candle. It has a very long upper wick, closing significantly lower than its high for the day. This is what's known as a shooting star pattern, and it often indicates a potential short-term reversal or at least a pause in the trend, as buyers were unable to hold the price at those new highs against selling pressure. The key resistance is now firmly established at that all-time high, right around $123,996. For support, the first major level to watch is the previous resistance zone around $110,000 to $112,000. Below that, the all-important psychological level of $100,000 will be a critical area to watch if we see a deeper correction. Let's zoom in on the daily chart to focus on this recent October surge. The candle on October 1st, which coincides with the government shutdown news, is a massive green candle on significant volume, showing a clear breakout from the previous range. This momentum carried through for 2 more days, culminating in that peak we just discussed. The price action since that peak is what we need to analyze closely on the lower timeframes. Now, switching over to the 1-hour chart, we can see the story of the last few days in greater detail. Here is the powerful, almost vertical ascent to the all-time high. You can see the sharp and immediate rejection from that level, with a massive red candle wiping out several hours of gains in a short period. Since that drop, the price has been attempting to find its footing, trading in a choppy range. We are currently seeing a battle play out between approximately $120,000 on the low end and $123,000 on the high end. This area is now a critical short-term zone. Holding above $120,000 would be a bullish sign of consolidation before another attempt at the highs. However, a decisive break below this level could trigger a faster move down towards our next support zone around $118,000. Let's drill down even further to the 15-minute chart for the most immediate picture. Here you can see the microstructure of the current price action. After the sharp sell-off from the high, price has been forming a series of lower highs and lower lows, indicating short-term bearish pressure. It is currently trying to stabilize, but the bounces have been weak so far. Traders should be watching for a break of this immediate downward sloping trend line for any sign of renewed bullish strength. Conversely, a break below the recent local low around $122,000 could signal the next leg down. The volume has been declining during this consolidation, which is typical before another significant move. The market is coiling up for its next decision. So, let's go back to the daily chart to summarize what we are looking at. The macro trend and the fundamental news are overwhelmingly bullish. The path of least resistance appears to be upwards, especially if we can break and hold above the new all-time high of $124,000. The bullish scenario, which I would place at a 65% probability, is that this is a healthy consolidation after a massive run. In this case, we would see price hold support above $118,000, break the all-time high, and begin its journey towards the analyst target of $150,000. This would be reinforced by continued positive news flow and strong ETF inflows. The bearish scenario, with about a 35% probability, is that the shooting star candle on the daily chart marks a significant short-term top. If we lose the $118,000 support level, we could see a deeper correction towards the $110,000 to $112,000 zone. This scenario becomes more likely if we see profit-taking accelerate or negative macroeconomic news emerge. A panic event could even push us back towards the $100,000 psychological support, but that seems less likely at this moment. To recap, the most important levels to watch are resistance at the all-time high of approximately $124,000. Key support zones are $120,000, followed by $118,000, and then the larger zone at $110,000. Watch for a confirmed break of the current consolidation range on the lower timeframes to signal the market's next intended direction. Thank you for joining us on Explain the Charts. Please remember, this content is for informational and educational purposes only and is not financial advice. Always conduct your own research and risk assessment before making any investment decisions. Trade safe, and we'll see you in the next video.